What's up, everyone? Today, we're going to take a deep dive into Warren Buffett's insane dividend portfolio and how he's pulling in billions in passive income from just a few key stocks. Buffett is obviously famous for being one of the greatest investors of all time. He's been handily beating the market for over 50 years now. Since taking over Berkshire Hathaway in 1965, he's grown the stock price by an insane 4,300,000%. But what's really wild is how much passive dividend income Berkshire pulls in every year. Based on Berkshire's most recent regulatory filing, the company is going to collect over $6 billion in dividends this year alone. And get this, $4.3 billion of that is coming from just 5 of Berkshire's stock holdings. That's the power of dividend investing. Let's walk through each of these 5 dividend cash cows one by one. First up is Bank of America. Berkshire owns over 1 billion shares of Bank of America, making it one of their largest holdings. With the bank's recently increased dividend of 96 cents per share annually, Berkshire is going to generate almost $1 billion in dividend income just from Bank of America. One reason Buffett loves Bank of America is that it benefits hugely from higher interest rates, and with the Fed aggressively hiking rates, it is swimming in net interest income. The bank is also investing heavily in technology to drive digital growth. Next on the list is Occidental Petroleum. Berkshire owns over $10 billion worth of Occidental preferred shares that pay an 8% annual dividend. So that's $800 million right there, plus over 200 million common shares paying about 61 cents annually. All told, it's around $960 million in annual dividends from Occidental. With oil prices still very high, Occidental is churning out cash flow, and it's using the windfall to rapidly pay down debt. A stronger balance sheet could send the stock price surging. The third biggest dividend payer for Buffett is Apple. No surprise there since it's Berkshire's largest public holding. Berkshire owns 915 million shares of Apple, so with the tech giant's 96-cent annual dividend, that's another $880 million per year in income. Even though Apple pays a relatively small dividend, Buffett loves the stock for its buyback program and the explosive growth of services like Apple Music. Moving on to second, the Chevron is another big dividend payer. Berkshire owns over 120 million shares, so with Chevron's 6.04-cent annual dividend, that equates to around $740 million per year in Buffett's pocket. Chevron has actually raised its dividend annually for over 35 straight years. With oil prices high, it generates tons of excess cash to support its dividend. And finally, Coca-Cola rounds out the top 5. Berkshire owns a whopping 400 million shares of Coke stock, bringing in $736 million annually from Coke's $1.84 per share dividend. Coca-Cola is a true dividend legend, having raised its dividend for an incredible 61 consecutive years. Even though it's not a high-growth business anymore, Coke still delivers rock-solid cash flows year after year to keep paying those dividends. When you add up the dividend from these 5 monster dividend stocks, it comes out to a jaw-dropping $4.3 billion in annual dividend income for Buffett. Now that's the power of long-term compounding in action. By locking in these quality dividend payers for the long run, Buffett makes raking in billions in passive income look easy. But don't be fooled. It takes decades of discipline and patience to build a dividend machine like Warren Buffett. Let me know what you think about Warren Buffett's massive dividend portfolio in the comments. If you enjoyed this in-depth dividend breakdown, hit that like button and consider subscribing for more investing insights. See you all in the next video.